Hello, this is John Kicklighter, Global Head of Content for StoneX, here to discuss the market conditions into next week and the top event risks that global investors will likely be focusing on. Now, in terms of general market conditions, we still have a designated risk-on appetite, but it doesn't really have a strong fundamental footing. Now, this has been the case for weeks running now. We have had very prominent fundamental issues, most notably that we're still dealing with now at the time of this recording, the U.S. government shutdown. That uncertainty, however, has not curbed or pulled down that risk-on appetite, but it does come with some very serious caveats. And that's what I would be watching for. While the markets can have their designation of risk on, it doesn't necessarily mean that there will be strong conviction to drive it forward. Now, we could see some alleviation, maybe the alleviation of the shutdown will give at least a foothold for some short-term gains. But this is already a very rich market and also very concentrated market. We have these markets that are pushing on the AI thread, which is being considered a strong motivator for building up on already over-leveraged markets. But that is not necessarily a discounted consideration. We really don't have a great avenue for untapped opportunity when it comes to growth or from any of these other conditions. We can really only have relief from threats to really amplify this already stretched market. Now, that being said, I will continue to monitor very concentrated, controlled market activity. The S&P 500 through the morning of Friday was running one of its smallest six-day ranges since back in September of 2021. So very, very quiet, despite it being at record highs. And that's that reticence. We're looking for something that really moves and motivates. Obviously, it's easier to motivate to the downside in a more significant way that turns into a trend because we are stretched and we are concentrated in risk-based assets. But it is not necessarily a dictation of direction. You can still have that march higher with some relief. All right. So generally, I'll also be watching financial stability concerns, most notably the anti-dollar picture. A lot of conversation about the world trying to withdraw from the United States because its protectionist programs and its uncertainty with its government shutdown paired with its very large debt. But I do think that is shifting over into a really anti-fiat rather than anti-dollar, which is why the dollar is actually firmed up this past week and why gold continues to gain. There is just a general shift away from the fiat-based assets and more towards something that can give an alternative. And while we have a little bit of crypto interest, Bitcoin has been often stated as being the anti-dollar. Really, its gold has the long-term perspective for that. Going back for millennia. So I would be watching that as well as a general condition factor. In terms of markets to watch, I would say watch gold. If it starts to come down very quickly, I would expect something to significantly have changed, most likely the end of the shutdown. But it is going to be a very interesting measure of a global macro perspective. I would also watch the dollar, because it's at the center of a lot of these fundamental themes. And very notably, I would watch at the risk concentration perspectives. And it's not easy to always see that. You always see if something like the S&P 500 is rising or falling, or its tempo. But I like to look at something that's a little bit more internal to that particular asset class. So I like to look at ratios like the NASDAQ 100 versus the Dow Jones Industrial Average. That's the tech-heavy index versus the blue chips. Or you can watch something that looks at the larger cap versus a smaller cap, like a Dow versus a Russell 2000, and it can show that concentration. Now, in terms of fundamental themes, I do think that we have to keep very close tabs on the headlines, looking for that government shutdown news. At the time of this recording, still not resolved. And there's really not a lot of deadline or timeline. It's just a count up of each day that the U.S. federal government is closed. And the closer we get to those furloughs hitting GDP, there's a loss of GDP in the U.S. as the U.S. government is closed because it's a large consumer, a large spender in the economy. But the threat of potentially losing jobs permanently is a much bigger issue because it feeds into other concerns like a rising unemployment that we have seen delayed a little bit with the delay of the non-farm payrolls. I'll also be watching the theme of earnings because we are getting into earnings season. And it kicks off with JP Morgan as the first, probably the major financial player. The financial sector is the first sector to truly come across the wires in each quarter's earnings run. And you'll want to watch that to see how the themes are starting to play out in the financial sector. Obviously, the financial sector is a core of all these themes, but it isn't concentrated in the tech industry. So we want to see how this important industry outside of that AI influence is performing. I'd also watch the consistency in growth and financial stability that we can get from something like the IMF's update for the World Economic Outlook and the Global Financial Stability Report. It's very difficult to get a consistent view on how economies are doing, what the outlook is, because they come from local governments or central banks, and people question the consistency across those projections and their measurement. While the IMF is a way of giving a global look on the same kind of metric. Whether you trust the IMF, that's always a consideration, but at least we have a consistency, and that's what I'm looking for. Whether it be market moving, we'll have to see. Now, in terms of event risk, Monday is relatively quiet. It starts off with the Chinese trade balance, and I think that that is an important one because the U.S. and China's trade war is tightening up a little bit in advance of the meeting of the Chinese and U.S. presidents. The Chinese ministry has suggested that they are going to increase pressure on exports of rare earth metals or minerals, to the rest of the world, particularly the U.S., and that's probably in advance of that trade discussion. On Tuesday, things get much more interesting. We have Singapore GDP. That's the first major economy to release its quarterly GDP report. We will have China's coming out the week after, so that's going to be a notable top economy, obviously, but this kicks it off. We also have from the U.S., we have the U.S. business confidence figure from the NFIB. Obviously, we want to see how they're doing with all these uncertainties and the shutdown. We have earnings before the open. We have JP Morgan and a number of other major financial institutions. And then, of course, we have the IMF's World Economic Outlook, WEO, and Global Financial Stability Review. Those are both very important. Market moving, we'll have to see. Now, on Wednesday, we theoretically have the U.S. CPI. Now, this is an important indicator, obviously, with monetary policy and whether it's going to impact growth as it slows down with inflation picking up. You run the risk of a stagflation or stagflation-like economy, which is very restrictive of economic expansion in general and is a difficulty for monetary policy considerations with the Fed already under attack from multiple sources, including the White House. This would be a really important indicator, but it's not clear to me whether it's actually going to come out because of the delay of the government shutdown. So keeping tabs on that. We also have the Beige Book, which is a countdown 2 weeks to the next FOMC rate decision. So keep that in mind. Now, Thursday, we have UK GDP, we have Canadian business confidence. Theoretically, we have U.S. retail sales. Again, I don't know if that data is going to come out due to the government shutdown, but we do have the housing market index, the NAHB, which is a noteworthy reflection on the U.S. housing market. And then finally, on Friday, we'll have U.S. housing data, tick flows, and import-export inflation figures. Again, this is all dependent upon whether that data is going to be released because of the shutdown. Now, this is a interesting mix of content, events that could stir the market to life. Or we can see these big themes and the unresolved issues curb some of the impact. But keep tabs on that volatility of these markets and their relationships. It is very important. Okay, that wraps up for the week ahead. Don't forget to like and subscribe for more financial market insights.